JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 20th of August 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com. and click on the research tab right there on the top. Now, a quick update on what's happening here globally in terms of the coronavirus. Now, I can see that, yes, the figure has risen a little bit yesterday, so, well, unfortunately, but it is how it is, guys. For now, it continues to rise. It kind of fluctuates up and down. So, yesterday, like I said, we had a nice uprise here, basically, yep, it got close to the previous numbers, but didn't really quite reach those. So very good. I mean, that's the at least the positive side. There is some positivity in all this. But nevertheless, again, we will continue monitoring this, and we'll see how the market reacts to that. Now, jumping into the charts here. Now, the first one I want to touch on here is Nikkei 225. Nikkei closed today in the negative zone. However, as I've mentioned to you guys previously, that even if it drifts a little bit lower here, falls below the 22,965 territory, as long as it stays above this downside line taken from the high of the 10th of June and above the 21-day EMA, which, as you can see, kind of almost coincides perfectly with each other. As long as the price stays above that, then yes, there is a good chance for the index to rebound and push higher. However, if this somehow gets broken and the price falls and closes a daily candle below the 21-day EMA, then, well, we could start considering maybe a bit of a slightly larger correction to the downside, because still, as long as we are staying above the 200-day EMA, there is still a potential for the bulls to kind of drive this one higher. So that's why, guys, for now, be very careful. Be very cautious, and yeah, let's see how all this is going to play out. Something for you also to keep in mind, and I don't want to really overcomplicate things here, but let me just grab a channel. Basically, there could be a potential for a small rising channel here. Now, it's not an ideal one, however, yeah, you can try to draw it on your chart, but something like this basically. So you can see that the index could be in this rising channel. I mean, for this to get confirmed, we would, to be honest, like to see maybe a heavy drop here towards this lower side of the rising channel, and then a rebound from it, and then another push higher. So this way, kind of maybe the channel could get confirmed even more. So for now, we're gonna keep this idea just in the back of our heads. I'll come back to this. I'll keep in mind. I'll keep on monitoring this, but for now, the main question here is, can it rebound from this this downside line and this 21-day EMA? Now, jumping into Shanghai Composite, also closing, well, not closing, but still trading, because it still has around 3 minutes left of trading. So it is on a down move today. Here, for example, as I've mentioned to you guys previously, that what I'm going to be looking at here is this potential range roughly between the 3,181 zone here on the downside and the 3,457 on the upside. So previously I had a push above this area, but now given that it drifted further south, I'm going to be, if this reverses back to the upside, I'm going to be aiming for the upper bound of this range again. And then if it gets closer to that level, I'll take it from there. I'll see what it wants to do after. Maybe it wants to break it. Then, yep, good news for the buyers. However, as I've mentioned to you guys yesterday here on this index, if we get a drop below the 3,409 zone, then yes, further declines could be possible. Further declines up until the 21-day EMA or these two levels near the 3,336 zone first of all, of course, and then the 3,307 territory, which also, as you can see, acted as a very nice area of support recently, so and specifically last week. So that's why for now, yes, it is. We are aiming for a bit of a larger move, or I should say a bit more downside. I wouldn't say larger because that's probably the wrong word to use, but a bit more downside, I would say, up until this 21-day EMA, and then probably we'll take. I'm gonna keep an eye on this because if it starts kind of fluctuating here and with undecided, maybe there could be a chance for the 21-day EMA to hold again, and we could see a nice rebound and push higher. However, that's why I have the downside scenario only from this 3,307 territory. So just to be on the safe side, a nice good daily close below this area could open the door towards that lower side of this range here near the 3,181 zone. German DAX. So yesterday the German DAX closed nicely in the positive territory. In general, European equities managed to kind of close in the positive zone. The US equities took a dive yesterday. Not a strong one, of course, but kind of spooked by the dovish tone from the FOMC meeting minutes. So yeah, for now, I mean, we might see Europe actually following suit today. And let me just quickly have a look at the cash index. So yeah, the cash index is currently balancing at around 12,820 zone. So basically what we're going to have here ourselves is a nice, first of all, a nice drop below the 12,913 territory. I talked about that. Basically this is kind of right now is very tricky. So very, very tricky, because yesterday I was talking about this level here, the 12,913, which if we get a break above that and close above that, that could kind of increase the chances for a further push higher. However, now looking at this, all this is kind of really probably we're going to be taking a bit of a neutral stand, because in a way we're seeing that the equity markets in the US and Asia are taking a bit of a hit. So in a way Europe might follow suit, as I said before, and it could kind of drift back to the downside here. However, given that the price is still above the 21-day EMA, so it's above the 12,773 territory as well. I talked about this level previously, so I need to see a nice good daily close, a drop, a nice good strong move below this area first before kind of, let's say, aiming for a bit of a larger move to the downside. So for now we're basically going to be seeing the index stuck in this little area here. So let's wait for a confirmation break. And in terms of the upside, to be honest, yes, we will keep an eye on this 12,913 zone, which is the highest point of June. Another good push back above it, yep, could help more buyers maybe to join in here. But if it drops below this 12,773 territory, well, like I said, the downside could be back on the table and the short-term downside, I would say, because again, for now we're gonna keep everything short-term. Now another index here, I've talked about this this week a lot, and the US dollar. So The US dollar, I was telling you guys to keep a close eye on this 92.24 level in my videos yesterday. So what happened here, you can see that we had a nice strong rebound, and the rebound came after the FOMC meeting minutes were released. Also yesterday I was mentioning, guys, that there is a positive divergence here, as you can see on our RSI and the graph itself. We can see that yes, it did confirm this positive divergence, and now we're seeing a nice push higher. So this could, in a way, travel further north. The fact that it got back above the 92.55 level, of course, kind of strengthens that idea. So now what I'm going to be aiming here for initially will be the 21-day EMA here, shown as the yellow line, and the 93.81 zone here, which, as you can see, recently acted as a very nice area of resistance. Didn't really allow the price kind of to stay above it. So for now I'm going to be aiming for that, but yeah, we'll be very careful, because if it gets another hold up here, then we could see another round of selling. So that's why, guys, it's quite exciting here. And the dollar rallied yesterday because at the moment the US dollar is seen somewhat of a safe haven. So basically, although the FOMC, the Fed, is not really happy about the economy, or I would say maybe is careful, very careful with the economy right now. I mean, the investors are seeing the dollar as a safe haven for now and jumping into the USD. So that's why USD yesterday gained against all of its major counterparts. So I'll get to the pairs in a few moments right now, but yep, for now, like I said, that's the situation here on DXY. Keep your eyes on this barrier, the 93.81 zone. That's our next potential target. Now gold. Gold here is a tricky one. So yesterday it declined. So basically, in the beginning of this week, I was telling you guys to keep a close eye on this 2015 territory, which presented itself as a fantastic area of resistance, from where the commodity dropped heavily yesterday and kind of wiping out the gains made in the first half of the week. So if we look at the weekly candle right now, you can see that it's almost unchanged, kind of. So yeah, the big question here is, will it actually drift further south? And if it does, of course, we will aim for some lower levels here. However, we'll be very careful near this upside support line taken from the low of the 20th of March, guys. So be very careful here for now. Even, like I said, let's say if it stays below this 21-day EMA where it's currently kind of stuck at, if it trades below that 21-day EMA, then yes, I will aim for this upside support line taken from the low of the 20th of March, and if we'll take it from there, because if it provides support again, we may see a nice rebound and a push higher. So something like this here could be possible. So keep your eyes on that, guys. If this upside line breaks and the price starts falling below the low of last week here, near the 1863-64 zone, something right around there, if it drops below that, this would confirm a forthcoming lower low and further declines could be possible. Now, jumping a quick update on Brent oil. To be honest, again, it's not doing much. I mean, it's just coiling up here. It's getting into a tight squeeze, trading between the 21-day EMA and the 200-day EMA here, shown as the yellow line and black line respectively. So in a way, of course, it might continue moving sideways like this, but to be honest, it will get into even bigger squeeze here. So that's why we're waiting for an exit. We're waiting for a breakout here. For now, of course, all this is looking a little bit more on the positive side. However, we cannot really talk about the positive side because we need that confirmation break either above the 200-day EMA or a heavy drop below the 21-day EMA. So keep your eyes on this one, guys. Like I said, there's not much to say here. The only thing, we can only wait. Ethereum quick update here. So this has worked out nicely previously, so I haven't looked at this one for quite a while. Now the big question here is, can the 21-day EMA provide decent support? If it can, oh yep, we could see a nice rebound and a push to the upside. But for now, of course, we'll be very careful here. We'll be very cautious. And yes, the question here is this: will this 21-day EMA hold? The way you could play it out a little bit on the safer side is keep your eyes on the highest, or I should say, the high of the 2nd of August here near the 416 territory. A nice good pop above it may open the door again towards these higher levels. So that's why probably be very careful. For now, we'll take a bit of a neutral stand, because for us even to consider the downside, preferably a drop below the 363 territory could do the trick, and we could then start looking at slightly lower areas. Now jumping into AUD USD, and here this is what I talked about yesterday, guys. So yesterday we were was saying that in a way there is a possibility for this one to move higher. However, if it struggles and if somehow gets back below the 0.7243 territory, now this is where we could consider maybe a bit of a bit more correction towards this upside support line taken from the low of the 30th of June. So this is exactly what happened and happening right now. So the pair is drifting a little bit lower today. However, it's getting held here near this upside line and slightly above that 21-day EMA as well. So if we want to look at some lower levels here, given that there is a potential for DXY to run to the upside again, so this pair might start moving lower. However, to be on the safe side, well, first of all, a break of this upside line is needed, then drop below the 21-day EMA is required, and if you were very cautious, wait for a move below the low of last week near the 0.71 09 level, excuse me. So yeah, the 0.7109 level could be that barrier, could be that hurdle, which if breaks, if it gets broken, then yep, it could open the door towards slightly lower areas here. But for now, all eyes are on this upside line. Let's see if it continues to provide support. If it doesn't, then well, brace yourselves, we could be getting a bit of a correction here. USD CAD, now here the pair is pushing higher. However, this is the problem here with USD CAD, and although the dollar is showing a bit of strength here, still looking at the USD CAD here, yes, it could travel a little bit higher here. It could end up testing the downside line here, this medium-term downside resistance line taken from the high of the 19th of March. But if it provides good resistance again, then yep, another round of selling here could be possible. However, if this downside line gets broken and the rate gets lifted above the 1.3314 level marked by the lowest point of June, then yes, we could consider another possible push higher here, a further push higher, and more buyers could be joining in somewhere around here. But probably they should still be very careful, because we do have another downside line, slightly more flat, but this one's taken from the high of the 31st of March, so which also could provide some decent resistance. However, we will consider a possible move towards this downside line if we get a break of this slightly steeper one. So well, obviously, but before that, the question is, will this downside line break anyway? I mean, will it actually provide decent resistance or not? So so yeah, that's what we're going to be looking at. But first, we'll be aiming for a bit more upside here in the short run, and yeah, let's see if this downside line does provide resistance. So GBP-CHF, another interesting pair, and yep, continues to trade above this downside line taken from the high of the 13th of December. So I talked about this pair a lot previously, and you can see that yes, for now the bulls are, well, I should say the bulls managed to maintain the pair above this downside line, which is great. However, the bulls are still too weak, and they're not really showing good push above this 1.2037 territory, which I spoke about previously, because as you can see, it continues to provide decent resistance. And even yesterday, the pair did travel a little bit higher, but failed by a few pips of reaching that area and drifted back down. So today we're seeing a bit of a correction, a setback here. However, probably, and as long as it stays in all this territory right here, this is going to be our neutral zone, and in order to get a little bit more comfortable with higher levels, a push above this barrier would be required, above this 1.2037. And then, yep, we could maybe target the highest point of June, near the 1.2257 zone. Sorry, 1.2260 zone. Let's round it up here a little bit. So, yep, in other words, we need to wait for those breaks. In terms of the downside, yes, to be honest, it could drift lower here. It could test this downside line again. However, it's all really difficult around here. So that's why preferably a drop below the 1.1754 level here, marked by the low of the 27th of July, could do the trick for more sellers. Up until then, we're just gonna remain neutral. And finally, Euro USD got a strong, or should I say, got hit yesterday, and this is what I was talking about in my video yesterday as well. So what I was saying yesterday, that there is a potential for this one to move higher, just because the previous candle here closed nicely above this 1.19 zone, rounded up towards the 1.1910 zone. It closed nicely above it. And yep, it was yesterday in my traders espresso and tea time. It was still trading around here, around this area above this 1.1910 zone. But what I was saying, that because it's kind of struggling to move higher straight away, we need to see a move above the previous high, and which was the previous high was around the 1.1965 level, and we didn't really kind of move above it. The pair failed to reach the high of yesterday, and you can see that this is the result that we had. It waited until the FOMC minutes were released, and yep, the dollar strengthened and pushed this pair lower back into this range. So first of all, we will get rid of this range. I mean, no longer this is a range, and we can keep an eye on the 1.1910 territory just for the sake of it. But now what we're going to do here is, if the pair starts moving below this 1.1815 territory, this is where we could maybe consider a bit of a larger correction to the downside, initially aiming for the 1.1725 zone, and then yep, we'll take it from there. If that gets broken, it opens the path towards this upside support line taken from the low, the 14th of May. So basically, from the very short-term perspective, there is a possibility for this one to move further down. On the broader picture, still paints a more positive one, because we are still trading above this upside support line. As long as this upside line remains intact, there is still potential for this pair to move higher later on. But if this upside line gets broken, then, well, I mean, it could turn out to be very ugly for the bulls. So guys, I really hope you found it useful. Thank you very much for watching and listening. Thank you very much for joining in. I really appreciate that. I value your time, guys. So yeah, like I said, I hope you found it useful and helpful. If you want to catch my video later on, my traders tea time is always 13:15 GMT. But for now, guys, I hope you have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.